Hello guys, this is the video on tax rates if you are doing business. So basically if you are doing business, then what are the taxes, what is the tax rate and how much taxes you will pay. Uh, and like if you are running a business as a sole trader or as a company, we will discuss in this video. Right. So if you're a sole trader means you're running a business under your name. Most of the people who are driving taxis or Uber or Uber Eat or these type of rides, they are sole trader because ABN is held under their personal name. So if you are doing a business under your personal name, you will be sole trader. So in case of sole trader, there are no special tax rates. You will be paying tax as normal individual, and your salary income, your business income, both income will be added, and then you pay tax accordingly. You do not get a separate tax-free threshold for running a business. For example, you earn 50,000 from job and 20,000 from business, just driving Uber. So 20,000 business, you will be paying a high tax because there is no separate tax-free threshold. Both the incomes will be added. Please see the screen and you will understand. So on first 18,200 there is no tax. You have to combine both the income. Then after that it is 19%. That's the normal rate. 19%, 32.5, 37, 45, plus you pay Medicare levy of 2%, plus there is Medicare levy surcharge. So the main thing to understand here is that your business income will be added to your salary income. Your all income will be added. That is the real problem, because normally sole traders, they are doing job as well as business. So business they are doing normally on weekends or in the evenings they are driving. So that is the reason on that income they pay 1/3 tax, 34%, or even higher tax, because there is no tax-free threshold, right? Okay, let's move to the next slide. Okay, if you are running a company, what does company means? Company means ASIN number, Australian company number. If you are a company, there's a procedure to to make a company. You first established ASIN number, Australian company number. Once you have ASIN number, then you apply for a separate ABN number and a separate tax file number. So company is a separate legal entity. Company has got nothing to do with you. You will have your own tax file and ABN, and company will have its own ABN and its own tax file number. So company will pay separate tax, company will file its separate tax return, you will lodge your own tax return, right? So what are the tax rate? The tax rate is 25% for base rate entities. Base rate entities basically means small entities. Most of the small entities, they come under base rate entity. So whatever is the income, net profit, the companies pay 25% tax. There is no tax-free threshold. You do not get the benefit of 18,200 as you get an individual. So if the company earns $100, the company has to pay $25. So straight 25% tax, right? There is no medical levy, which is 2% in case of individual, and there is no medical levy surcharge also in case of companies, right? Okay. In case of companies, you can do some tax planning. So this is a very basic tax planning for a very small company. Obviously, if you're a big company, you can do a lot of things, but this is the very basic tax planning which all of you, which all of the small people, which all the small companies, they can do it. If you see, till $45,000, you have to distribute your income from company to you, to self, spouse, family members, till $45,000 each. So basically 45,000 you, 45,000 your spouse, then 45,000 your adult kids, or maybe your cousin or someone who is not working or something. You can distribute $45,000 each, because the effective tax rate is only 19% plus 2% medical leave, which is about 21%. But company rate is 25. Plus, in case of individual, you get tax-free threshold. So only till $45,000 you can distribute to individual. You can distribute any income, but if you distribute till $45,000, you will get tax benefit, and you will have to pay less tax. You will be paying less tax, right? The balanced profit in the company, let the company pay the tax, because if you take the profit, then you will be paying more tax, since you are in a higher threshold. You're in a higher tax slab, sorry, you're in a higher tax slab, you will be paying higher tax. So the company will only pay 25%. Whatever tax the company is paying, the company can get the benefit of franking tax credit. Franking tax credit means, so let us say company made a profit now, it paid tax. Let's say it made a profit of 100,000 and it paid 25,000 tax. The franking tax credit next year, it can distribute that 70,000 which is left, 175,000, it can distribute that net profit to the shareholder, and the shareholder can claim franking tax credit. So that tax which the company has paid, it is like a saving pot. It's like a saving pot which the company is paying, and the benefit can be claimed in future years by the shareholder once company distributes it to its shareholders. So it is called franking tax credit. If you still don't understand, that's fine. You can call us or email us or register online, and we will tell you how does it works. Okay, there is one more thing which all businesses, all companies should do, which most of the time we see that businesses are ignoring it. Maybe they are ignorant or no one tells them. They must claim depreciation on all assets, business assets. Can be plant, can be machinery, can be car, can be real estate. Let's say company has bought a real estate, a warehouse or a commercial shop, or maybe a saloon or a office space, then it must claim depreciation. Depreciation is a non-cash expense which you have not incurred, but you get tax benefit of that. So make sure these are the very basic things which you should do if you are running a business, that will reduce your tax to a large extent, right? Okay, thanks for watching, guys. It was a very short video, but I don't want to make very long videos because they become too boring. So this video, you have learned that if you're running a business, you must take some benefits. You must do those 3 or 4 things which I've told you earlier, that will legally reduce your tax liability. You must take benefit of franking tax credit in future. That is your future saving. You can get whatever tax company is paying, you can get it back in future. This is a very important thing which a lot of accountants don't understand. If you're still unsure, you can email us or register on our website, and we will explain you further. If you want to learn more, we have got 5 secrets to $5,000 tax refund. Once you register online, you get those 5 secrets, plus you get $20 bonus just as a welcome gift. It would be great if you register online. If you have learned something in this video, please do us a favor. Please share this video so that your friends, your family, they also learn something from this video. Thank you so much. See you in the next video. Bye for now.